afternoon. Alexandra has just said something very important. What is important are tools. If you want to have positive economics, of course, we are aware of all the objectives, but afterwards you have the tools, and finance is one tool. Finance is a means and not a goal per se. To give back meaning to finance consists of wondering how finance can be this indispensable tool. Indispensable is a very strong word. We need finance. Finance should be a means and not a goal per se. And before talking about finance, let's ask a question. What is money? Money, this is a promise, very clearly. So back for the second part of this first day of this forum on positive economics, we saw how necessary it was to have positive economics, but how can we achieve this goal? This afternoon, two plenary sessions, crucial sessions for a better economy, a plenary session and a plenary session on measurement and a session on funding. How do we fund a positive economy? How do we put finance at the service of economics? And to elaborate on this topic, I would like to welcome our first speaker, Thierry Philipponnat, the Secretary General of Finance Watch, an NGO. Thierry Philipponnat. Good afternoon. Alexandra has just said something very important. What is important are tools. If you want to have positive economics, of course, we are aware of all the objectives, but afterwards you have the tools, and finance is one tool. Finance is a means and not a goal per se. To give back meaning to finance consists of wondering how finance can be this indispensable tool. Indispensable is a very strong word. We need finance. Finance should be a means and not a goal per se. And before talking about finance, let's ask a question. What is money? Money, this is a promise, very clearly, very simply. The promise according to which the wage, I'm going to get it at the end of the month, will be used, or I can use this money next month to pay for my rent or for the school of my children. So what I'm doing today will be recognized tomorrow and gives me a place in the society. It's a social contract. We should never forget that. In 2 minutes, we'll mention a lot of figures, percentages, huge amounts. But the question behind all this is, have we built a system whereby those promises are made by people we trust? What is the value of this promise if you do not trust the person making this promise to you? So you should keep that in mind during the course of our debates. Do we need to give back meaning to finance? Isn't it a matter of fantasy, delusion, or let's have a look at a few figures, very official figures. Sources are easy to find. What is the size of the European banking system? If you take all banks in Europe, 46,000 billion euros. Let me repeat, 46,000 billion euros, 350% of the GDP of the European Union. And for the sake of comparison, there are accounting differences, but let's put that aside. In the States, is 80%, the size of the American banks, 80% of the American economy. In Europe, 350%. In Europe, 400%. In the UK, 500%. There are technical differences, so the ratio is not that big. It is not as dramatic as those figures, but the banking system is huge, in other words. Second figure, important to have in mind, is the global size of this market, the market of derivatives. What are the derivatives? It's a promise, a commitment. Something has a given price for a given period of time. Let's have a derivative product on this remote control. I commit myself to selling it to you, gentlemen, sir, for 3 months at a price of €5. We've just created a derivative. I commit myself to selling this remote control for 3 months at €5. Those exchanges of a promise relating to derivatives account to $700,000 billion. That is to say, 12 times the GDP of the planet. So the derivative product is useful because you can hedge against the currency fluctuations. If you export as a company, this is useful. And we should have a figure in mind as well, knowing that, of course, you need to give to make sure that finance is useful. The percentage of derivatives used to hedge companies against risk, it's only 7%. 7%, that's for the hedging value. 7%, that's not a lot. And what about the remaining 93%? Those are exchanges among financial experts, exchanging promises to each other on the remote control, the example I have taken. So this is, he's going to win, I might lose, but it doesn't matter for the remaining people. So it is important to make sure that finance is meaningful, and therefore this money should go to the economy, to people, to citizens, and not just to stakeholders, and not having a real use of that. A third figure, the trading, high-frequency trading. What is it? This is technology, IT, computers, very powerful computers, enabling you to buy and sell financial assets. The time horizon between 1 millisecond and several times per second, if possible. I've just wink here, 350 milliseconds for winking. And during that time, 7,000 shares have been sold. So I buy, I sell, I buy, I sell 7,000 times to sell and buy equities. 40 to 50% of the stock market deals in Europe are done at this speed. 2/3, 60%, 65% in the States are done at that speed. It is not an anecdote. What we are saying is that most stock market deals are done at that speed. And we see that no human brain can respond that fast. So that's problematic. Concentration. The largest banks, I said that the European banking system is 46,000 billion euros, all assets included, and the 15 largest banks have 20,000 billion euros, about 40%, 43%. Huge concentration, very few stakeholders, and this is important because we're going to see later on how do we do to what are the solutions to make sure that the situation evolves. Concentration plays a role here. And this finance, this hyper-developed finance and figures are explicit. Isn't it good for company, for the society? Isn't it good for? We're here to talk about positive economics. So before having positive economy, we need real economics, and all this finance is useful. We may say If you look at the European bank business, 28% of those 46,000 billions consist of lending money to non-financial companies. This is a European average. 28%, that's for lending money to non-financial companies or to individuals. Okay? So this is very important, of course. If someone says or asks you in the street, what is the utility of banks, the usefulness of banks? Well, it's to lend money, but it's only 28% in Europe. And what about the remaining 72%? Of course, those 72% may be useful, but it is far from the concept according to which a bank is there to lend money. The largest the bank will be, the lowest this percentage will be, and the smallest the bank is, the highest the percentage is. So the Finance Watch say that the motto is for a finance for serving the society. It is very close to the concept of positive economics. When we say society, we mean citizens. Derivatives, I've been talking about it. I already gave the statistics. 7% are used to hedge the companies against risks. And official statistics, the currency markets, well, it is indispensable for exporter convert yen into dollars or euro or sterling when you do foreign trade, but only 4% corresponds to this international exchanges. The remaining, that's just speculation. What we are saying is that there is a paradox. Here's the paradox. On the one hand, we've got too much finance. We see that figures are huge, and there are even very serious reports from the IMF, for instance, saying that in all Western economies, we can say that finance is no longer productive and no longer contributes to growth. We are in a it is detrimental to growth. But at the same time, we do not have enough finance because finance doesn't go where it is necessary. Of course, there's a tiny part, a percentage, a given percentage, but it's only a given percentage. We saw the figures going to funding individuals and companies. So there is a paradox. I'll be very brief here on this part devoted to Finance Watch. Finance Watch was an NGO. The politicians, all political horizons included, are aware of the fact that we have to create a debate and change the situation. So we need to raise the awareness of citizens. We are all responsible. And Finance Watch are elected representatives saying, couldn't we say something else? And can we defend the general interest and not just defend individual interest? This is a concept, a democratic concept. So finance. This is a loan given to the to people, to companies, to make sure that society can work. What do? We take very concrete, down-to-earth measures. At Finance Watch, we like to illustrate our words, to convey messages. What is key, and we have all heard of that, is to reform the structure of banks. And the drawing you have here in front of you, we could comment on it for at least 1 hour, but let me highlight 2 or 3 points. First, why shall we reform the structure of banks? Why do we grow? Why are we always heading for more? The answer to this question is simple. there is a public support of the banking system for very legitimate reasons. We do not want deposits to disappear. If a large bank disappears, everything stops. And of course, people don't want that. And because of this support, there is a growth which is almost exponential, a growth of activities which are not useful for the company. So the society supports the vital dimension of banking activities, and the large banks use this to grow the non-vital activities. That's the cause of the problem. There will be discussions on speculation. Is it good? Is it right or not? This would be the topic of our following session. But the question is, shouldn't we say, fine, okay, speculate, go ahead, but not with the support of the society, and not in a system where you privatize profits and you socialize losses. If you win, it's for you. If you lose, it's for you. So here there are some mammoths, some huge elephants. So we saw figures on concentration. There are a lot of small banks. In Germany, there are 2,000 banks. Often people say we need a large bank to serve a large economy. No, in Germany, there is one giant, Deutsche Bank, and then Commerzbank. And after that, you have a plethora of small and medium-sized banks serving a dynamic economy. Large banks say to us, you have to support me, because if I collapse, everybody will be collapsing. What is interesting in this drawing as well is the regulator, the supervisor, pulling the tail of the elephant, saying we should talk to each other. And here it's really at the core of democracy. The reality is that regulators, they are honest, competent, clear-sighted. You see that I support them, but they are they cannot do much. We see our small regulator behind the elephant pulling on his tail, but if the elephant kicks him, the regulator will not be able to do a lot. So there is a huge debate on banking regulation. Regulators need to have the authority and the power to make sure that the situation changes. The second point is that, second drawing, we should not forget that 100% of the money in this world belongs to individuals. Behind the large financial institutions, you find individuals, those lucky enough to have savings, large insurance companies, banks. So behind all this, you have individuals, and you need to protect individuals. You need to inform them, because if you can address this topic at the other extreme of so beforehand I was saying we have to reform the structure, but if we take the problem at the other end and we say at the other end you have individuals who need to be protected, so two major debates. What about the banker? He is the banker, an advisor, or a salesman? You will understand my answer. And then is the person in front of me, when the person advises me, will recommend a financial product because the fee he will get is bigger. Same for drugs and physicians. So a technical debate behind that, but it's an essential concept. Another concept, information, but of individuals. Or information given to individuals. You have the bad, the better, and good. Bad, better, and good. It's fine to inform people, but all those who have studied behavioral economics know very well that to give information on the documents, but those documents contain 25 pages, well, no one will read this leaflet, and they will keep on consuming products which are bad for them, detrimental to them, toxic products. So information is good, but you should have the courage to say say that a few things should not be authorized. This is a prerequisite to make sure that funding and finance makes sense again. And then you have a culture of manipulation. The LIBOR example, of course, you have a culture of manipulation. Why? Why do you have such a culture? Well, it's because we developed a system whereby if profit is generated, we believe that it is good for the society at large, because to earn money is good. So the LIBOR event is incredible. We've heard about it in the newspapers, and we need to eradicate this culture. It has to do with regulation, with culture as well. And I must say that more and more people in the financial industry are aware of those topics. They are convinced that we have to remedy the situation and to work hard, but it is not over, and we still have a lot of work on our plate. Finance Watch in action should be the society at large in action. And let me conclude on that. This is part of our NGO work. We regularly say, well, the politicians should do more. They have not done enough. We, citizens, have to work with politicians. We have to involve them. We have to support them. We have to get engaged, because without this engagement from the citizens, we won't make it. There are too many powers here and there. The Attorney General, the American Minister of Justice, was blamed by the American Congress, and he said, well, bankers, he was blamed because some bankers could not be sued, and he said, the minister said, they are so powerful, I cannot do anything against them. So it was too big to change. And of course, some people have become so powerful that they cannot be jailed, they cannot be sentenced or put to jail. So that's a real problem. So let me stop there. This is a sentence from the Bank for International Settlements. We find evidence that it is unambiguous. Faster growth in finance is bad for aggregate real growth. Thank you.